Good morning. It is Tuesday, March 15th, 2016. It's 6:25 a.m. Chicago time. There are risk disclosures and hypothetical performance disclaimers on my website that indicate that futures trading does contain substantial risk and is not for every investor. What is on the calendar this week is the Federal Reserve uh, is largely speculated now. I've read this for the past day or two to go ahead and sit on their hands this month and allow the global economy hopefully to hit the reset button with all the new stimulus that is coming out of the countries and perhaps engage in an interest rate hike next meeting in June. If not one of the earlier meetings, but I would anticipate June is what um, the consensus is. I guess you could call it. The traders are betting that it's 50% chance or higher, and it looks like they're, which is great, releasing their thinking themselves by talking to the media, which I think is fantastic. I don't think this should be a game of gotcha or what are they going to do. I think that there should be some advanced warning for the markets so that they can get in line with this. And I applaud the Fed for allowing us to have some insight into what their thinking is before these meetings. So good for them. We don't have to panic or worry about something drastic happening this week with everything else going on with the election and, like I said, with all the other countries, falling off the planet. And our oil is falling off again. But let's take a look at the daily. It is just really in a very soft correction, and it should retrace. We can't just go vertically up. That would not be a healthy market. You need a retracement. We hit a level of resistance. It is natural for a market to retrace, and we have our Fibonacci indicators that lead us into the probabilities of once we enter a retracement, will we get back to the 100% level and or exceed it? And the Fibonacci rule on 38% says yes, you're going to not only hit that 100%, but you're going to exceed it very well. And that could lead us either to the 61.8 or 127.2. And the 61.8 would bring us back up to this level up here at 45.56. And I think that's where the market is leaning for this to go to, which would bring us back to this other pivot in September. So I think this is where the market is trying to get to. So that would lead me to think that we're either going to have a 38% or a 50% retracement. So I'll be looking for the market to and this 50% looks like it's a great location because it looks like it's offering the support. So I'll be looking for it to come down to 33.75, 33.76, somewhere around here, and then start moving back up. We've got our KXD. So a good time to watch for this would be for the market to come all the way down and then have that KXD cross back up above the 20 and to look for an entry at that time. So let's dial this down to the smaller time frame so we can see what was happening to the charts. Here was a direction guide. I have this on both generic so that you can see I have this generic direction guide This is without the RTH session. This is the global um, Globex session without the RTH session. If you see just the RTH session, that is here, and then Globex is here. And you can see Globex is getting the bulk of the move. So it pays to set your clock to get up in the middle of the night and trade this Globex session. As far as where we are now, we're at S1 and bouncing. We stopped yesterday at the March 9th close. And so I would expect to see a retracement back into yesterday low, yesterday close, before we send this back down. There is a bit of divergence, not much, just a bit. So this could keep flushing. So we could get a temporary flush down to double test our bottom, but we're just going to be flushing back and forth between these, up and down between these levels. And what went up does come down. So what we do is we look for our previous points of control. Draw our lines, as well as that 25% value area. Price will become contained. So there are my support resistance areas. Drawn on my chart. And the only thing here is an initial balance low that could possibly hold price up, and that's what it bounced off of. Do you see that, people? Do you see this initial balance low, and do you see that's where price stopped on a dime? The algos are tied to these levels. I keep trying to explain that to you guys. If you want to know where the markets are going to trade to, get the market profile MP lines indicator, because you can see where they stop on the dime. Okay, so now we're probably going to come back up to yesterday close, yesterday low, and make another down swing. If I need to put a 23 retracement on my chart, but just keep an eye on these retracements. I have a trend indicator on my higher time frame chart. As you see, this red super trend band, and you see where it respects the trend and is continuing. So just make sure that you're, if you would like my settings, buy a template, and I'm going to share all of these with you. But if you ask, but they work more often than not, especially when you're in a trend, and then you know when to expect a trend resumption after they reject your trend band and come back down. The super trend is based on a deviation level, standard deviation level, and that's why it works so well. You're deviating from the mean of the trend and coming back down in it, and it's a volatility indicator, so it self-adjusts with your trend. I think it's one of the best indicators that was ever designed. It's the only third-party indicator that I use in my strategy for the direction guide strategy. A twin indicator that he has, which I'm going to be introducing, is the high-low activator. And I put two super trend settings with the high-low indicator settings, and I am experimenting with various methods for re-entering a trend on these reversals, candle reversals back in the direction of the trend. And it really guides you to help you see when exactly to get back into these trends. So having Bloodhound really helps you visualize your indicators. On the direction guide indicator, if you want to see what it looked like just to set up a short direction and just to take these one or two trades, this would have not allowed you to get in until, I mean, it would have kept you in the trade the entire way down, but it won't allow you to get back in. Sometimes the markets just do not retrace. And that's what happened yesterday. The market just did not retrace for me that it normally does. It was a very trending, slow, downtrending market yesterday. And then we got into the RTH session, and went sideways very soon after the RTH session opened. Like at night, we had 1 hour of the downtrend. I was expecting a higher bounce back up to VWAP that never happened. We got up to the point of control and just kept going flat. So when you start bottom bouncing, you can't trade that. I call it bottom bouncing, and that's a very common pattern in crude, and it's just impossible to trade. So when I see a pattern setting up like that, I just, sit on my hands. There's nothing you can do, because even if you try to send it down, it's going to come back up, and it just bounces, resting until you can get a higher retracement, and then it comes back down. It went back up to the open, and then it came back down. So we are retracing a little bit on this tiny divergence, and I would like to see it get back up to yesterday low or yesterday close before coming back down, and to have more of a healthy market. But there's no telling with crude. The volatility has just been fantastic. We're already at almost 3%. So the swings, the net change in this market has been phenomenal. So it's really providing some great runs. I'm a directional trader, so I only am interested in shorts. I'm not going to be counter trend trading this, but anytime you see a divergence set up and you get your bar is moving back towards the value area, inside the value, that's a great trade. That is really a great trade, to take it to the mean or the opposite side of your value. There are other markets now that are trending. We've got the 6B turning around to the south. The Japanese yen is turning long again. And the NASDAQ is still long, but I'm thinking that this is going to be coming off, and the ES should be coming off their trends. The euro is just mixed. There's nothing here today for the euro. I think the market is going to be waiting for the interest rate decision for Wednesday. So I will not even be worrying about the euro today. And I probably am going to sit on my hands for the E-mini also. This is a little different solver. I wanted to show it to you on the E-mini. It's my 8 slope solver in the direction guide, and it helps keep you out of that middle part of the chop. When you set up these Unirinkos, you can see the wicks, and you don't trade wicks. We trade candle bodies. So when we see the market is getting wicky, we just stay out of that market and we try to find a market that is moving with candle bodies like this is. And if you want to find out what direction you should be trading, you can either put it on the RTH session, and you can see that you're only interested in shorts on this day. Or if you want to say, I'm a Globex trader, I'm going to go ahead and trade the Globex, you can put it on the Globex and you get a better picture. So you know that you're only looking for longs here. You're not even worrying about shorts. And you can just wait for every retracement and then hit it. Of course, we are in the United States and we wake up usually in the morning to trade the regular trading hour session. So this is our trading hours. And I have another filter that will eliminate the chop. And it's the regular core filter, it's index futures filter. So I can get you in and then you can just either sit out, wait, trust that that pivot isn't going to get hit. This one, it did get hit. It came back forward. It actually didn't make it. It was a double bottom long. So very good trade on a KXD. Double bottom long on a KXD at the 20. Very good trade right here. So get used to the direction guide. Learn how to use it to your advantage. Right now, let's see what the market is doing. It's going short. Globex is going short, so I'm sure RTH will set up short. And excuse me, I'm just not going to be interested in really trading the ES today until we can get the weekly daily 60-15 turned around. On our larger time frame, you can see what this looks like. We do have our downtrend starting. So if anyone wants to get, and I've told my neighbor this today, he's got quite a bit sitting in a Fidelity account in stocks. And we had the conversation yesterday that today would be a very good time to consider moving your money to the mattresses. And he's going to consider doing that. I'm not a commodity trading advisor. I can't give you specific buy or sell recommendations, nor would I want to. But if you look at the software today, the software is leading us in the direction I think that this market is going to be heading. Okay, I can say that much. All right, so crude. Crude is in a retracement waiting for the market open, and I will be waiting for the 15-minute to turn around. And it's just very, mind-bending to me that we're already, at 3%, 4%, 5% on a daily basis in crude. The volatility has just been, like I said, phenomenal. But the time to trade crude largely is the Globex session. So if you're not able to get up in the middle of the night or start trading in Asia, then wait for a deeper retracement that did not occur yesterday. Maybe we'll get one today. This little direction filter is fantastic. and it allows you to take your short trades when they set up beautifully. And here we came into the pre-market, so you can just, if you know your direction, just put your lower time frame data series on the short direction and just wait for them to hit. And that's all you can do, and take your trades until they start bottom bumping. And then I just don't worry about trading. You got to know the time to trade. That's the key to my trading success, is following your instinct. If the market is still moving but it's up 4% and you don't feel like engaging the market, don't engage. There's nothing to say that you have to take a trade, right? So don't even worry about it. Just watch the market and learn from your experience of being able to monitor the market and seeing what it does and how it reacts. Nothing like screen time. It's valuable. It's extremely valuable. So good luck with your trading, and tomorrow's going to be the big day. So keep some powder dry. Thank you so much.